Springboard, a Prime Securities initiative. Media partner CNBC TV 18.
Prime Securities hosted the inaugural edition of its flagship initiative, Springboard, in Mumbai. Across 2 high-energy days, 24 emerging startups pitched breakthrough ideas to a curated network of investors. Springboard offered more than a platform with expert mentorship, strategic guidance, and a clear roadmap to growth, IPOs, and strategic mergers and acquisitions. The event opened with an address by N. Jayakumar, Managing Director and Group CEO of Prime Securities.
Essentially, over the last several years, we've been focusing in Prime purely on the iBanking, investment banking, fee-based. We call ourselves ROI and RONW driven. RONW being return on net work, not net worth, and ROI being return on intellectual property and not investment. With that in mind, Prime has been fortunate, very blessed that we've had the tailwinds, the wind on our back as it were, that we've generated fair amounts of cash, which has been possible to invest in various things. But one of the things that we did was invest our efforts, time, and more important, our emotional energy in the startup ecosystem. These companies came to us, many of them with a 10 lakh a month revenue. Today, these companies are doing 4 crores a month. There are companies that didn't exist 4 years ago doing 150 crore turnover today. We've had the huge support of friends, associates, and networks to be able to see these companies grow. And when we look back at 3.5 years, the other thing that we did was, and it came through as a SEBI directive almost several years later when the MSME market became very hot, that they actually said that you need to know your client not just know your client, you need to know the people you're taking to the market. And there's no way that you could just go out and market hot ideas and expect people to make money. So as part of that, the average time spent for us with these 24 startups or 24 early stage companies more than startups is probably between 2.5 and 3 years, maybe a little more than that. And the whole idea, therefore, is to be able to challenge existing sort of paradigms and move forward and do things which people have not done. Obviously, capital is important and capital is something that gets raised. But whether it's debt, equity, business plans, sounding board, most of these companies give us monthly MIS, not because they have to, not because there's a legal requirement, but because they want to. And the final thing is, I've seen the HNI and family office as probably the most patient capital that I can think of. While institutions and VCs have all kinds of conditionalities, down round, up round, etc., I've seen a lot of pragmatism in the way a category which didn't exist 5 years ago, family offices and individual investors coming to the fore and actually being there for companies with rights issues, with loans, with help in terms of restructuring business plan and the works. And that is the ecosystem that's got us all so excited and decide to brand it through an event called Springboard with the best in class. Hopefully, this is the beginning of several annual events, the Springboard with new companies, new progress, and hopefully the next 2 days you'll have as much fun as the fun we've had putting this together. I say I, but it's really the team here. So thank you very much for coming, and I hope you enjoy yourselves. Thank you.
One of the highlight sessions at Springboard was Seed to Scale, a masterclass in brand building, where industry leaders shared invaluable lessons on creating enduring brands, from defining purpose and sharpening positioning to scaling with clarity and conviction.
We are here, Venki, at this session with a number of startups. And very often when you think of brands and brand building, you think of companies like Titan. You think of big companies and you say big companies should be building brands. And really the question I think that would be wonderful to ask you about, because of your experience both at Titan as well as nurturing and building up Carrot Lane, which is of course a very entrepreneurial company, is why should startups think about brand building, and why is that important in their entrepreneurial journey?
I think irrespective of the situation, brand building, at least in this context, is key. So even a large corporation, when it starts a new venture, it's small. It doesn't even exist. For example, we've just got into the women's bags category 2 years back. And when we start, it is zero. There is nothing. So we have to, build a brand, nurture it, bring it to scale. So therefore, the situation is no different for a startup. The startup is not owned by a corporation, presumably, but the situation of the need to develop a customer value proposition, which finally is the reason why you will be preferred to other people in the industry by customers, that you'll be able to charge a premium, which will, bring you continued profitability over time. Brands come with that advantage, and therefore a startup needs a brand and brand building as much as a corporation does.
And we are very fortunate here to have the Harsha Bhogle of brand sitting right here with Santosh Desai. So Santosh, who is going to be the Vaibhav Suryavanshi of brands now? So if we have a new phenomenon on the horizon, how do you build the Vaibhav Suryavanshi of brands, particularly for our startups here?
I have no doubt that we have a bunch of Vaibhav Suryavanshis in this room, so I don't think that's going to be a problem. No, but I think it's such a real question, the question that a lot of startups ask of themselves as to, yes, of course, branding is good and building a brand is good, but we have other concerns right now. And so many startups that one meets start by saying that, we have to get the product market fit, we got a whole lot of executional details to get right. It is too early in the game for us to start thinking about brands. We will get there, and we understand it's important, but we aren't at scale yet. And I think the reason why a lot of people feel this way is because of a common misperception about what brands are. If you think about brands, my English language definition of brands is that it is nothing but a pattern of expectations. When you interact with a person over a period of time, you get to know a person, we start having expectations of them, we expect them to behave in a certain way, to do certain things and not do certain things. Essentially, that's what a brand is. Now, how do you create a pattern of expectations? By behaving in a certain way, not by saying things, not by communicating, but by acting. And that action has to do with everything that you do. Who you hire, how you construct your website, how you build your product, how you story tell the product. It is a business strategic platform and a framework. It connects who you are on the inside with who you are seen to be on the outside. It is not just the mask that an organization wears. It is actually, if you define the brand without doing any advertising, without doing any marketing, it will guide your behavior in terms of what to do, what not to do. That view of the brand is what actually makes it strategic, and that is essential for any business organization, whether you're in the consumer business or not. So to my mind, that is the fundamental misperception that needs to be corrected.
So let me ask that question to you, Minal, because you've literally built a brand from the ground up. How, as a startup, did you make that trade-off between how much to spend on brand building in a more strategic way and brand building in a more communications way, exactly as Santosh distinguished between the two? How did you make those trade-offs?
When I first started, we did go out to raise venture capital funding. And at the time, it was, our the venture fund that invested in us was Chrysalis Capital. So this is really going back a long ways when they were still Chrysalis Capital. And everyone's thought at the time was, you've got to put money behind marketing. You've got to build a brand. You have to have brand recall and all of that. However, the point it led us to was 3 years after we started, we almost shut down. We'd spent all of the money we had brought in, with investors and everyone pushing to spend on marketing, that we found ourselves with, a huge mismatch between our run rate and how much money we had. And so in 2003, either we were going to shut down or had to find a way to keep this thing going. So we actually bought out our investors at the time, bootstrapped the company through sale of art, which the value of our own personal art had gone up over a few years, thanks to Saffron Art, perhaps. And we then used those funds, as I said, to bootstrap the company and keep things going. It's interesting that I think since we had begun doing these exhibitions around the world, in San Francisco, in New York, in Hong Kong, in London, and reached out to clients, a big part of that was personalization, was reaching out to individual clients, reaching out with art, with creating that confidence. I mean, keep in mind, this is a very different kind of product, if I can call it that. This is certainly a product where the 80-20 rule applies. So it was 20% of clients that accounted for 80% of our revenue. It was very important to reach out to them personally. And what happened in 2003 was there was a very sharp escalation upward. And I feel it was a lot of that initial investment in building trust and building recognition of what Saffron Art was offering that allowed people to feel the confidence to spend, which meant we were able to grow our sales consistently with the market and found ourselves at the end of 2004 with 35% of market share of the global modern and contemporary Indian art auction market.
What do you think, Damodar? I mean, as you have looked at some of these brands, have you think certain brands have got that economic analysis right and been able to scale properly?
I don't differentiate between communication and strategic brand building, because I think it's a continuum. Each consumer now is a broadcaster. That's the change that has happened. If I'm a young brand, then I can use my consumers to transmit, and especially on the digital channel, especially on the online in the online world. The trust that one potential consumer puts in what the other consumer is saying is far higher than any other brand-driven or brand ambassador-driven communication is. And I find many startups and many young brands actually using this phenomenally well. The other bit is, if you're a food brand, then the most effective part of your marketing is actually tasting. Because taste is your ultimate proof of the customer liking the. And with modern retail platforms, physical and digital, the ability to get from the slightest intent to trying the product, that distance is very small, and it's the shortest in quick commerce from intent to consumption. I call it the fastest marketing channel. That the product is involved, that an actual consumption experience is involved, is secondary, but it's the most effective way to be building brands. And we see some of the brands in both personal care and food area using it really effectively to use the channel and to use the consumer as their amplifiers of their message.
So with that, let me conclude the panel. I think this has been a fascinating discussion. I, for one, have learned a lot, and I really want to thank the panelists for their very, very insightful and very interesting observations.
Springboard, a Prime Securities initiative. Media partner, CNBC TV 18. Springboard, a Prime Securities initiative. Media partner, CNBC TV 18.
Springboard also brought together a bold mix of founders and brand leaders for a high-impact conversation on next-gen brands rewriting the consumer playbook. Trailblazing entrepreneurs explored how India's new age ventures are reshaping consumer behavior through innovation, authenticity, and deep market insights.
Misha, you're the chairperson of PL Capital Group. Take us through some of the key turning moments, in building PL Capital and being a woman in this male-dominated sort of sector, the equity market. How have you navigated bias, if there were any, and, established credibility, which is so important in this sector?
So I think first thing is that PL Capital, Prabhudas Liladhar, has been in business for 8 decades.
Yes.
So that itself is, if you ask me, in financial market, a very tall thing. And unless you are deep-rooted in the culture of trust and integrity, to survive in financial markets is next to impossible. Being part, and I started my journey with PL as an institutional salesperson. And the journey started, and I kept adding businesses to the group. From institutional research and sales, I added investment banking and corporate advisory. I added portfolio management services and NBFC. a time came after a decade or decade and a half, I would say, when all the other promoters, the actual Prabhudas Leeladhar sons, we could have been very easily taken up by one of the banks or a foreign buyer. And all the rest 3 partners were willing to do that. And somehow I thought that, no, this is, and I still very strongly believe this is the golden decade of India.
Yes.
And beyond. And I don't want to hang my boots and then go back instead of searching a next good investment idea and adding a team to doing something and retire. And the best part is, from a 350 member team, I didn't lose a single person.
Wow. Well done.
And today we are a 600 people team. And I'm actually extremely thankful to each one of them who stood by.
All right. Let me now get in all the founders here. In a landscape where capital and blitz scaling, once dominated, what does building a brand today, with purpose and profitability look like today, Aarti?
Because I think today that's extremely important. You need to build a brand in a sustainable way. So there has to be that balance between growth as well as burn and profitability. So you have to strike that right balance and have the correct levers in place, saying, okay, if over the next 1 month I need to reduce the burn or increase profitability, you have that at the back of your mind in terms of how to be able to get that done, right? Because I think that when you're building a startup, it's very important to think through that, because you should never be in a situation where, okay, I need to raise money tomorrow or I'm dead, right? So I think that's very important, especially in a product-driven business.
Exactly. Okay, Alpana, let me go across to you. How are you doing that at?
Yeah, so, I find that the entire landscape of brands in every category is so cluttered that I was very, very clear that I needed a product that was hugely differentiated. It was unique, it was differentiated, it wasn't easy to make by anybody else. So I had enough moats and it had a global market. And so I think all of that put together led me to just focus on creating a product which will really stand out. That's today at the heart of building brands, because otherwise it's just endless marketing
Yes,
to keep the difference.
You have the challenge of low trust, high regulation market. How did you overcome that? Yeah.
So I think we're still overcoming that, but regulation is one part of it. You just have to meet the standards and you're there. I don't think that's the issue. I think the issue is that how do you really not just get people aware of you, because that's easy to do. You can advertise and you can get awareness, but how do you get into people's hearts and minds so that they choose you? And that's really where I think the brand play comes, or what the brand stands for. How is it communicating? How is it reaching the right people? And in my case, it's important, the very first month we launched, we were getting an order from a company that said, we want 200 of our managers to get your helmets and please supply them. And 200 of those managers, there were some scooter riders, there were some Bajaj Pulsar riders, there were different types of riders. And it was very important that the helmet is seen on the right heads. So we said no to that order. Okay. Which, was actually a very big call to take.
And this is your first month of operations, you're saying?
First month of operation. So I think as a brand, you have to be clear about what you will not do.
Bold moves there, bold choices there. Pooja, let me go across to you. How are you ensuring profitability, burning down cash? How are you doing?
Yes, I think, this combination of purpose and profitability sometimes can be linked to the product itself. Like in our case, for example, the category itself is a strong case of combination of purpose and profitability. Like consumers are looking at lab-grown diamonds as an alternative because it saves the entire mining process. It saves, and therefore the environmental impact or the positive environmental impact that lab-grown diamonds have is something that consumers are accepting. Along with that, because it saves up the mining cost, the affordability angle comes in. So I think sometimes consumers are also, it's not just about brands looking at their own purpose and profitability, but also what it means for consumers is important. And sometimes the product category itself does it for you, So it's almost like now it's embedded in our brand itself because of the category,
All right, okay. Actually, let me go across to you. Again, Health Total has transitioned from a legacy brand services business to a scalable wellness platform that you just spoke about. What were your biggest learnings in sort of adapting a deeply personal practice to a digital-first consumer? How did you do that?
Yeah. So you're right, it was a personal practice initially. And then we both realized that an online treatment works as effectively as a in-center treatment. Now, there was a immense need for people to become healthy. They had hundreds of problems. The age group that came to us from 7 to 70 with all kinds of chronic ailments, whether it's diabetes, whether it's heart disease, whether it's cholesterol management, migraine, bedwetting, exam fever, stress management, anxiety, depression. I mean, the applications are huge. Yes. Now, how do you reach out to those people? Everyone can't come to your clinic, even though at that time we had 60 clinics all over, but that was not enough. So we set up online teams where people could consult us online. As long as you're giving results, people will come online or they'll come to your centers. So that was a big learning. Secondly, we figured that this integrated approach, because no single pathy can correct all the medical problems. You need unique therapies for every disease, right? Like allopathy doesn't have answers for everything, like especially for chronic lifestyle diseases. So you use Ayurveda, okay, which is great for digestive complaints, liver health, detoxification, etc. Homeopathy works very well on the mind. It works very well on skin. So we joined that together. Functional medicine, huge market for supplements today. So we started using a lot of that. And then I, of course, personally realized, and I've been telling all my, we have 200 doctors on our program, and we tell them that take care of your customer. Don't think that the customer is coming and you're just having that little interaction on health. Every customer that comes to you, every patient that comes to you, think you're treating your own father, your own mother, your own sister, your own brother. Your level of treatment will be fabulous. Why? Because you're treating your own family.
Yes.
And that connect gives you the trust, And once you have that trust and you give them the care, your customers are going nowhere.
Thank you for being so candid and for such an engaging conversation. Thank you so much for being a wonderful audience. It's been great. Thank you.
Springboard, a Prime Securities initiative. Media partner, CNBC TV 18.